Public service announcement from the U.S. Department of Health and Human Services. Adopt Us Kids and the Ad Council.
Seems everything costs more these days. Gas, groceries, and when's the last time you checked your wireless bill? When it comes to big wireless, if you're staying, you may be overpaying. Switch to Consumer Cellular and get your second month free for a limited time. You'll get the same fast, reliable nationwide coverage without the big wireless bill. Plans start at just $20 a month. Here's Veronica and Jackie, real customers.
I didn't know that I could get something for a lot less money that was actually better than who I was with before.
Anytime anybody complains about their cell phone bill, we say, you've got to check out Consumer Cellular.
And now for a limited time, new customers can get their second month free when they use promo code SECONDFREE. Just call, click, or bring us your bill and see how much you can save. Because when it comes to big wireless, if you're staying, you may be overpaying. Call 1-888-FREEDOM, visit a store near you, or consumercellular.com and use code SECONDFREE to get a free second month. Real people paid to share their opinions in this ad. Plans include $5 credit for auto pay and e-billing. Taxes, fees, and other third-party charges will apply. See website for additional details.
You're tuned in to Money Matters Boston, 1120 AM WBNW. This is the Money Matters Radio Network, WBNW 1120 AM and W275CM FM, Concord, Boston, the Money Matters Radio Network.
It happens all over Massachusetts. In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
As a busy mom, my to-do list is full.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has information to help you and your family live a healthier life.
Visit goredforwomen.org/momlife today.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine, no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutsky from the law firm of Cushing Dolan with your Financial Exchange Quick Tip of the Day. And today we're talking about your brand new guide, Todd, how to leave assets to your beneficiaries. Todd, how can you ensure that your kids' inheritance can be protected from future divorces?
Well, estate planning, as you know, does things like avoid probate, protect assets from nursing homes, and reduce taxes. But you know what? The family behind the estate plan can be more important. And so the trusts live on after you die, and you can have language in there that divides the assets to the children, but doesn't just pay it out, right? It holds it in trust for them and allows them to be trustee, but just not take it. In order to get it, they have an independent trustee that can say yes or no. And that way, by not owning the asset, if they get divorced down the line after you're dead and the other side says, hey, I want half of what's in that trust, you're going to say, that's great, but you have to ask the independent trustee. So it's now not going to be available to you. And more than just the ability to say no, it's the fact that you don't own it. So if you don't own it, it's not a marital asset to begin with, so it should not be even subject to the divorce. So learning how your trust works after you die can oftentimes be more important than when you're living, and it does more for you after you die than when you're living sometimes.
The estate planning experts at Cushing and Dolan have been helping families like yours for more than 30 years, and they've written a brand new guide called How to Leave Assets to Your Beneficiaries. To get your free copy of this comprehensive guide that will help you determine the best way to leave assets to your family, simply call 866-848-5699. That's 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing and Dolan. Cushing and Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Paul Lane. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Paul Lane.
Chuck, Paul, and Tucker with you here today. And on the last day of April, we've got markets sliding again. A whole host of economic data out this morning. And then this evening, we've got a bunch of earnings reports that we're going to be getting as well, including the two biggest ones today being Microsoft and Meta. And so obviously, we've got a lot that can move markets as we look at what is, shaping up to be a tough last day to the month to start. But Paul, as we've seen, these things can turn on a dime based on different headlines or different news releases that we get. So, obviously, I think we're cognizant of the fact that, hey, it's a long day here and you don't know exactly what you're going to get over the remainder of trading.
Yeah, there is a lot in balance this week, whether it's the GDP report, which we'll get into, or we've got the jobs report on Friday. And, of course, as you mentioned, those major earnings reports coming out at the close of the market. And then amidst all of that in the backdrop, any sort of update on potential trade deals with other countries perhaps might provide a little bit of optimism for these markets. But for now, there's plenty of economic data to parse through.
You want to start on that GDP report? I know there's a lot there, even though, again, this is still backwards looking in terms of it being Q1 before the tariff announcement, but that seems to be the place to start, Paul.
Yeah, let's go with that. As you mentioned, markets are selling off a little bit today. We're off over 2% on the S&P 500 in early trading, and the Dow Jones is off about 700 points, and it does come off the heels of this GDP report. What we saw for Q1 of 2025 is a contraction of the U.S. economy. GDP declined by 0.3%. Economists were anticipating we'd see a 0.4% gain. It is important to note with that data that we were expecting a weaker GDP report, a lot of that is a byproduct of the fact that many companies push through a tremendous amount of imports ahead of any potential tariffs, and imports can have a negative impact on this GDP figure that we're covering here, where we did see imports soared about 40% for the quarter, and that does lead to a bit of a detraction on the headline number that we're talking about here. Q4 of 2024, we had seen the economy grow in and around about 2.4%. Like I mentioned, that contraction does seem to have markets a little bit spooked here. The sort of generic term for a recession that's thrown out, though this isn't the absolute precise definition, is 2 consecutive quarters of decline in economic growth. This would be the first one that we'd mark, and if we were to see it in Q2, that would be loosely termed as a recessionary period. But to be clear, there are other factors that are important there, and there sometimes can be periods where you do see 2 consecutive quarters of decline, but not necessarily leading to a true recession. There is a lot to parse through here, but those are just some of the major takeaways here, is noting the outlier impact of imports as well as just a weak headline number there.
Yeah, so let's go through, kind of some of the different things that we saw. I know that you touched on a few things here. Let's talk first about personal consumption expenditures, which is a really fancy way of saying, hey, did people buy stuff?
Yep.
Personal consumption expenditures is how that is reflected. That grew at a 1.8% annualized pace, which is the slowest that we've seen since Q2 of 2023. And we talked about this last year, where the pace for PCE that we were seeing in Q3 and Q4 was at 3.7 and 4% annually in both or annualized in both of those quarters. And we talked about how, based on like the historical data that we have, that's kind of unsustainable. So I think the expectation that I had by and large was, look, that's probably not going to keep up. You're probably going to see a bit of a drop off there, just because that's not what you normally see quarter after quarter. So I think this meshes with that. The question that I think is in play here is, hey, do you get a rebound in Q2? Not because you expect things to go back to that level, kind of as like the natural rate of growth there, but I think much more, hey, now that tariffs are front and center for a lot of families, are you seeing families trying to front load some purchases now that they may have been spooked? So I think there's a decent chance that you can look at Q2 and be like, hey, consumption numbers can be pretty decent there. There's a pretty good chance that, that's not impacted as long as the labor market holds up in Q2. Do you think that's a reasonable take?
I think that's fair. It's just, we're going to be, so yeah, we've got a full month basically of potentially them pushing through those purchases. If there's further delay, well, I guess we're up against the 90-day period, right? And it seems like retailers are trying to do their best to hold off on increasing any prices. So I'm sure from a vehicle standpoint, I think we were looking at a 13% increase for the month of March in vehicle sales. That probably will trickle through in April's data when that comes out as well. So I think that's a real fair estimate to make, that we will see a bit of a jump just because people are trying to get ahead of any potential tariff impacts, particularly on some of the durable goods or those bigger purchases. That seems fair.
Now, let's go to kind of the next main category. So we've looked at personal consumption expenditures. How much stuff are people buying? The next one is what is called gross private domestic investment, which is a fancy way of saying, hey, how much are businesses spending on stuff that they need in order to run their business? It's not necessarily like, some of it can be talking a little bit, about inventory and stuff like that, but there's also stuff in there where we talk about fixed investment. So let's talk there first. Fixed investment is not inventories, but it's, are you building new facilities, factories, things like that? What are you seeing in those types of areas, stuff that is fixed in nature? And that grew during the quarter at a 7.8% annualized clip, which is really good. The thing is, there's not really any track record of that being a sustainable pace as well. The last 3 years were 2.7%, 2.4, and 3.7, but you did have some quarters that actually came in hotter than what we've just seen. As an example, Q1 of 2022 came in at 8.5% on an annualized pace for fixed investment. Q2 of 23 came in at 8.6%. So occasionally you just have like these outliers here. If you do end up, seeing 4, 5, 6 of these being strung together, then you can make the case, okay, there's something going on as far as, some kind of, new boom that's kicking off as far as, facilities construction in the US. But ultimately, remember, Q1, most of the time period there is before any tariffs had been imposed on any meaningful chunk of imports.
Yep.
And so I don't think that you can really draw a line to this number and be like, hey, this is companies trying to, reshore production in order to, deal with the tariffs. This is all pre-April 2nd tariff announcement. And by and large, the decisions to build plants in Q1 of this year were typically made 6 months, 12 months, or longer ago, simply because of the scale of what you have to go through when you are building new facilities, either for retail, manufacturing, warehousing, whatever it might be. So I don't think you can draw a line and say, oh, this is, companies trying to reshore, because it was before any of the tariff numbers were known.
Right. I think that point makes complete sense. The biggest one that we should cover within this area of the GDP report is equipment, where we saw a 22.5% increase on spending on the equipment side of things, still within this private domestic investment area that we were speaking of. And I wonder if we can point to that surge, which is pretty significant. If you look back at other quarters, we really haven't been in around these levels. It does seem to be sort of noisy quarter to quarter, the numbers that we'll see on equipment purchase increases, but 22.5% was pretty significant. And I'm trying to think if perhaps some of that was getting ahead of things here on the tariff front, because it was just such a big increase.
So I look through there in terms of that equipment piece there, just to be like, okay, like what is actually like, where could this be coming from? Just because, again, we try to get a sense of, okay, like what is actually making this move? Like, why is it showing up here? And when you look at the subcategories that are in there are 4 subcategories they have: information processing equipment, industrial equipment, transportation equipment, and other equipment. The only one that has that deviation to the upside is what's known as information processing equipment, which then leads us to be like, okay, what specifically falls into the category for information processing equipment? Like you off the top, you'd say, okay, information processing equipment, is that, computers? Is that something along those lines? And the answer is typically yes. So I'll read here this is from the Bureau of Economic Analysis, who publishes this data. In the U.S. national income and product accounts, most of the types of goods in the investment category, information processing equipment and software, have experienced rapidly changing technology and thus are candidates for inclusion in the new economy. This includes computers, peripheral equipment, computer software, communication equipment, things along these lines. So like that's basically what it is talking about there. So like you try to make sense of this, and was it just like a bunch of companies getting like data center imports coming in before?
Right.
I can't really make heads or tails of exactly what it would or would not be. But once again, it's in this narrow area. It's not pointing to, this giant pulling in of industrial equipment that would mesh with the idea that this is because of, reshoring or something like that.
Yeah, it would seem like, just from the sentiment that we've got from a lot of the major tech companies out there, where they're reiterating the amount of demand for their data centers and continued spending in that space, perhaps this number is a reflection of that those companies are continuing to spend on that front, whether it's semiconductors, servers, anything in the technology data center area, that this number is reflecting the continued demand for that. And we'll get more clarity on that when Microsoft and Meta report at the close of the market today.
So I also think the other piece that is going to matter here is not so much, hey, what did we see in Q1? Because again, I think this is backwards looking data and not particularly important or relevant. I don't know how much to weight this. And I know that's kind of weird given that it's GDP and it's kind of like, hey, this is a big one. but I just don't know what to do with this. And I think that things are going to even be skewed like in Q2, where you could see some really weird stuff where like that import boom wears off.
Mm-hmm.
So that'll help, the GDP number. But then inventories are being drawn down, which is going to hurt the GDP number. And consumption might be pretty good, so that'll help. But you might end up with less, going on as far as, motor vehicle sales and stuff like that, because some of that was front run. So it's like, I continue to think, look, don't pay attention to like one specific data point in any of these reports, because stuff is going to be kind of all over the place. It's going to be really messy. I think the big thing is, hey, look at the broad trends that you see across multiple data sets, and that'll give you a better idea of where the economy is actually going, because on some of the individual stuff, it's going to get a little bit funky and it's going to get a little bit messy.
Definitely.
So let's take a quick break here. When we come back, let's talk about what we're seeing from companies pulling forecasts as they are navigating first quarter earnings. We'll discuss that when we return.
Tariff fever is in high gear. We've got the latest on what might be next and how long it might last. Only here on the Financial Exchange Radio Network.
One of the keys to enjoying a peaceful retirement is flexibility. Hi, this is Chuck Zodda from the Armstrong Advisory Group. Today, retirement planning involves lots of possible changes and challenges given all of the external factors that may affect your goals. So creating a budget for your retirement is vital to financial stability. Retirement comes with a number of monetary considerations, from how much money you'll need every month to managing your existing investments through market volatility. Our new guide is called How to Build a Retirement Budget, and it will offer a variety of options for your consideration that may lessen your risks when it comes to your planning. Call right now at 800-393-4001 and ask for our new guide today. That's 800-393-4001, or request it online from our website, armstrongadvisory.com. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Consistently voted one of the top Caribbean destinations, the United States Virgin Islands is the perfect place for your next vacation. Whether you're looking for a romantic getaway, a long weekend with friends, or a family vacation, St. Croix, St. Thomas, and St. John have everything you need to enjoy that special time away from home. Take advantage of a variety of incredible promotions that are available right now. Go to visitusvi.com/promotions, where you'll find the details about all of these amazing experiences, including a stay at the Divi Carina Bay all-inclusive beach resort and casino on St. Croix. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Don't miss your chance to enjoy America's Caribbean paradise, the United States Virgin Islands. Head to visitusvi.com/promotions for more information and to book your trip today. That's visitusvi.com/promotions. Beneficiary planning and asset protection go hand in hand. Cushing Dolan has a new guide out called How to Leave Assets to Beneficiaries, and it can help make your planning process smooth and easy. Leaving your assets to your children isn't as simple as it sounds, especially if they have problems of their own. If you're retired or nearing retirement, it's time to consider the best way to keep your assets in your family while avoiding significant financial consequences down the road. Call Cushing Dolan right now at 866-848-5699 and get their new guide called How to Leave Assets to Beneficiaries. You'll learn which paths are the safest when it comes to protecting yourself and your children while avoiding unnecessary risks that can create substantial problems in the long run. That number again is 866-848-5699. Or you can request it online from our website, legalexchangeshow.com. That's legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
The Financial Exchange streams live on YouTube. Like our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
The Financial Exchange is part of our partnership with the Disabled American Veterans Department of Massachusetts. This year's 5K is Saturday, November 8th, and registration is now open. The race has sold out each of the past 4 years, and slots will fill up quickly, so don't delay. Visit dav5k.boston and reserve your spot, or join our team here at the Financial Exchange by registering under Team TFE. That's Saturday, November 8th for this year's DAV 5K. Sign up now at dav5k.boston.
Well, we got a piece here in the Wall Street Journal. It's titled Trade War Uncertainty Prompts Wave of Companies to Yank Forecast. This is not unexpected. We had talked about this a couple weeks ago, that we thought this would be happening, and in fact it is. Obviously, just a lot of uncertainty out there as far as what the economic situation is going to look like over the rest of the year. And so not particularly surprising that companies are saying, hey, we're not going to have guidance because we don't know what to expect.
Yeah, that seems to be the continuing theme across any earnings report that you'll listen to. The majority of the companies pulling guidance, a couple outliers saying that they're going to keep things in place and adjust as the situation changes. It will be interesting what moves some of these companies make, if there are significant cost-cutting measures that are taken. But again, any CEO will tell you that they don't know what the future holds over the course of the next several months. So it's hard for them to make a decisive move on cost cutting or any of these other measures without a full understanding of what the landscape is going to be like. They're certainly exploring how to absorb the cost of tariffs and how to push them down through suppliers or defray any added expense. But of course, it's something that we haven't seen in 100 years, this broad of a trade tariff front. So executives are still learning as they go here.
Yeah, and I think part of it also is, if you are a CEO who's sitting there saying, okay, I see these tariffs in place. Do I want to, try to bring some of this production back to the United States? It's made more complicated by the fact that you still have these lingering possibilities that are out there where, again, I think some of these are going to turn into real things in the near future. Would be the expectation of, hey, if the U.S. gets a trade deal with India or Japan, you might not have facilities producing goods over there right now, but maybe you've got a facility in China, and hey, if I just wait a couple weeks and there's, a trade deal announced with India, okay, do I try to move my production there rather than moving it back to the U.S.? And so maybe for the next couple weeks, you just make no decisions.
Yep.
And then the eventual decision might be move to a different foreign country for production rather than bring it back to the U.S. There are a lot of different complications that go into this.
It's true, and the tricky thing with that is that would be counterproductive to what the administration would want from its economic agenda, right? And I agree with you. I'm not disputing that. I'm sure companies will think that way, and I just cannot reiterate enough how challenging it is on the U.S. manufacturing side of things to compete with those other countries that you alluded to, just because if you look at labor costs, the amount of investment that's already occurred in countries like China and some of these other ones. India is trying to catch up on the manufacturing side. But that is, to me, the more likely outcome, that you just see not reshoring to the United States, but then perhaps finding alternatives, whether it's Vietnam, India, etc., then okay, let's bring this back to the United States. The minimum wages here versus some of these other countries, that alone is a huge disparity to make up to make your product as cheap as possible to end consumers. And there's many other inputs that go into that just makes it hard to compete on the U.S. side of things on manufacturing.
So obviously that's something that we're seeing here. Also a piece in Barron's. Tariff mentions spike 132% in earning calls. Uncertainty up as well as a mention. No surprise there, obviously, in terms of these being things that business leaders are mentioning on their conference calls. Obviously, like the actual data point in terms of like how much, like, okay, that's great that they're being talked about 132% more. But I don't know that there's much that's surprising there, because it's now something that businesses are trying to sort through in a way that they weren't for the last few quarters. Let's take a quick break here. When we come back, we got Wall Street Watch and Ask Todd after this.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network. New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com. Leaving assets to your beneficiaries is a critical piece of any estate plan. Cushing Dolan, the experts in elder law, has written a new guide that may help ensure that your assets are protected for years to come, while helping you avoid unnecessary mistakes during your planning. As an example, the new federal estate tax exemption is nearly $14 million. That could lead to a larger inheritance for your family members, but still raises concerns. There are several strategies in this new guide that will help you learn how to make the right decisions about your distributions at the right time. Cushing & Dolan have been helping New England families for more than 30 years. Let them help you, too. Call 866-848-5699 and get their brand new guide called How to Leave Assets to Beneficiaries. That number again is 866-848-5699. Or you can request the guide online by visiting LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we have a guide available this month titled How to Build a Retirement Budget. Mike, one of the rules of thumb that gets tossed around is, hey, just withdraw 4% of your portfolio each year and you'll be fine. Is that true still?
It can be, but it also leads to some confusing conversations because that 4% rule, one, is dependent on a very specific asset allocation that was recommended by the person that created it. And two, a lot of those things have changed over time and doesn't really account for the fluctuations that every retiree sees, right? You might retire and not start Social Security right away, in which case your withdrawals could be higher for a period of time.
What about on the other side of the ledger when you look at expenses? A lot of people say, well, I expect my expenses to go down. Maybe I only need 70 to 80% of my pre-retirement income.
Yeah, I mean, this one makes sense, right? Like, you're right now making money. You might be putting money into your 401k, paying FICA taxes that you won't in retirement. But this one especially, I have to say, varies a lot from person to person. That's 70 to 80% of pre-retirement income. And think about it this way, right? Do I still have a mortgage? Might that mortgage get paid off at some point in my retirement? What sort of debts do I have? Am I going to downsize to one car? Are we going to need both? What sort of travel am I planning on? And so that 70 to 80% rule can be a good starting point, but really you need to start with the budget.
Our guide is titled How to Build a Retirement Budget, and the way to request it is by calling 800-393-4001. That number again is 800-393-4001 to request our latest guide, How to Build a Retirement Budget.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Markets are selling off as Wall Street reacts to a flurry of economic data points this morning, including first quarter GDP, which fell at a 0.3% annualized pace, slightly worse than estimates of a 0.2% decline. Right now, the Dow is off by over 1%, S&P 500 is down 1.3%, and the NASDAQ down by 1.7%. Russell 2000 selling off 2.3%. 10-year Treasury yield is now flat at 4.17%, and crude oil is down 1.33%, trading just below $60 a barrel. Snap down by 16% after the company declined to offer a forecast, citing macroeconomic uncertainties that could impact advertising demand. As for the social media company's first quarter, the company posted better than expected top-line results. Meanwhile, Starbucks reported weaker than expected results, sending shares down 8%. However, new CEO Brian Niccol expressed confidence in the coffee chain's efforts to speed up its service. Elsewhere, Visa reported stronger than expected quarterly results as consumer spending held up despite higher macroeconomic uncertainty. That stock is down by 0.5%. Supermicro computer shares down by 16% after the AI server maker's preliminary quarterly earnings came in well below its own guidance. The company said customers were delaying orders of new servers and computer products. Caterpillar up by 0.5% after the machinery maker reported weaker than expected quarterly adjusted earnings and sales despite tariff uncertainty. The company did reaffirm full-year revenue and operating profit, and after today's closing bell, all eyes will turn to big tech earnings from Microsoft and Meta. I'm Tucker Silva, and that's Wall Street Watch.
This is Ask Todd on the Financial Exchange Radio Network. If you have an existing estate plan or are in the market for one, Todd Lutsky is here to answer your questions and help you plan for later life. Ask Todd is presented by Cushing Dolan, serving Massachusetts and New England for more than 35 years, helping families with estate and tax planning, Medicaid planning, and probate law. Visit CushingDolan.com. Now, here's Todd Lutsky.
And we are now joined by the one and only Todd Lutsky here for Ask Todd. We got the phone lines open at 888-205-2263. Again, remember, we only get through 2 to 3 of your calls, so get calling early, get calling often in order to be able to speak with Todd Lutsky about your estate planning questions. That number, again, is 888-205-2263. One more time, 888-205-2263. Mr. Lutsky, how are you doing today?
I am doing great. And you?
I'm doing well. I was thinking about my daughters yesterday, where the older one really likes riding in elevators, but the younger one prefers escalators.
Yeah.
They're raised differently.
Yeah, they definitely are raised differently. That's true.
They are. Todd, I want to talk to you a little bit about more on kind of naming of beneficiaries and specifically focusing on retirement accounts. A few years back, the 10-year rule for inherited IRAs was put into place, requiring them to be emptied within 10 years of going to a non-spouse individual, other than a few exceptions. Right. Has that impacted how estate planning factors into the choice of beneficiary in these cases at all?
I'm going to say it really that particular part of the Secure Act, which is what you're referring to,
sure,
has not really impacted it. What it has done, though, is it has clarified, I believe, the fact that you can name a trust as the beneficiary of an IRA and allow that trust to be what they call an accumulation trust, meaning the trust doesn't have to be a conduit where it just flows through and out to the beneficiary. So while it did change the distribution rules a lot, as you mentioned, making it come out of an IRA over 10 years instead of an entire lifetime of the children, which is a huge tax difference, of course. It also added this ability to name the trust as the beneficiary, or at least clarify how you can name the trust as the beneficiary. And so in that regard, it has helped. And remember, when would you name the trust a beneficiary of an IRA? Not all the time. Primary, always the spouse, 90% of the time. That's the way to go, is name the spouse as the primary. The contingent can be the trust, but if the trust simply says distribute the property equally out to the kids, and you're not holding it back for any reason, you're not protecting it from future creditors, you're not trying to get generation skipping tax benefits out of it and future divorce protection. Instead, the trust just pays it out to the kids. Well, then I don't think you need to name the designated beneficiary on the IRA the trust. Just name the kids. It'll come out over 10 years, and that's fine. However, if the IRA is a decent size, right, a good chunk of the estate, and you are protecting all the assets in the trust, saying hold it in trust for the benefit of the kids, divorce proof it, creditor protect it, and provide for generation skipping tax benefits, well then, yeah, I probably want my IRA protected from all of those problems as well. And so then I would name the designated beneficiary, contingent designated beneficiary of the IRA, the trust. So long-winded answer, but there's a lot involved with IRAs, folks.
Talking with Todd Lutsky from the law firm of Cushing and Dolan. Still room on the phone lines for your estate planning questions. That number is 888-205-2263. That is the number to call to ask Todd your estate planning questions live on air right now. Again, still a little bit of room, so do get calling if you've got a question for Todd that you want answered. That number again is 888-205-2263. We're going to take a quick break right now, but when we come back, it is going to be right to your questions with Todd. That phone number one last time is 888-205-2263.
Ask Todd with Todd Lutsky every Wednesday at 10:30, only here on the Financial Exchange Radio Network. Consistently voted one of the top Caribbean destinations, the United States Virgin Islands is the perfect place for your next vacation. Whether you're looking for a romantic getaway, a long weekend with friends, or a family vacation, St. Croix, St. Thomas, and St. John have everything you need to enjoy that special time away from home. Take advantage of a variety of incredible promotions that are available right now. Go to visitusvi.com/promotions, where you'll find the details about all of these amazing experiences, including a stay at the Divi Carina Bay all-inclusive beach resort and casino on St. Croix. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Don't miss your chance to enjoy America's Caribbean paradise, the United States Virgin Islands. Head to visitusvi.com/promotions for more information and to book your trip today. That's visitusvi.com/promotions. Beneficiary planning and asset protection go hand in hand. Cushing Dolan has a new guide out called How to Leave Assets to Beneficiaries, and it can help make your planning process smooth and easy. Leaving your assets to your children isn't as simple as it sounds, especially if they have problems of their own. If you're retired or nearing retirement, it's time to consider the best way to keep your assets in your family while avoiding significant financial consequences down the road. Call Cushing Dolan right now at 866-848-5699 and get their new guide called How to Leave Assets to Beneficiaries. You'll learn which paths are the safest when it comes to protecting yourself and your children while avoiding unnecessary risks that can create substantial problems in the long run. That number again is 866-848-5699. Or you can request it online from our website, LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing Dolan. Cushing Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
The breadth of the stock market sell-off in recent days hasn't been seen since the early days of the pandemic. And while it's easy to say don't panic, if you're concerned about your portfolio, given the impact of these tariffs, now's the time to have that conversation. Hi, this is Mike Armstrong from the Armstrong Advisory Group. If the market correction has you anxious, or worse, rattled, give us a call at 800-393-4001. Let's get together and talk through your financial strategy, evaluate its strengths and weaknesses, and make decisions for the future that are in your best interest. These are challenging times, but we've dealt with them before and are prepared to deal with them again. Our goal is to help you protect the assets that you've worked so hard to attain. You can give us a call at 800-393-4001 and request a no-obligation consultation. That number again is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Todd Lutsky answers your questions about estate and elder life planning every Wednesday at 10:30, right here on the Financial Exchange Radio Network.
All right, let's get right to your questions with Todd Lutsky. First up, we've got Eric in Springfield. Eric, you're on with Todd Lutsky.
Good morning, guys.
Morning.
Quick question. My father passed, left the house to me and my brother. He's buying me out of the house. He's residing in the house. Who's responsible for the property taxes?
So
we technically still own half the house.
Yeah, so let me ask a couple of questions about what has happened here. First of all, has dad died? Is your mom living?
Yeah, but they're divorced.
Oh, okay. Well, that
she has no.
Big piece of this. Okay. So dad's basically a single person. Did dad have a will, or did dad have a will and a trust when he died?
Trust. I'm in charge of the trust.
So was the property that was left deeded to the trust on the date of death, or was it in dad's name alone when dad died?
It was in his name alone.
So you had a trust, but it was not funded. That's we always use the term funded, right? So that house was not titled in the name of the trust. Okay. So now
it is now. No.
Because the will was a pour-over will, the will said, I leave all my assets to my trust. Is that how it got in there? I mean,
yep.
Because
to sell the house, divide it equally, or he's buying me out of it.
Okay. So the house went to probate, and this is important for everybody. Eric, I was trying to explain to answer your question, but let other listeners understand what's gone on here. So because the house was not in the trust on the date of death, it had to go to probate, but he had a pour-over will, so the will actually saves the day and puts the house into the trust, and that's how it got there. So now the house is in a trust, and the trust says to do what? Distribute it out equally to the kids, or does it say buy each other out if one wants the other one to buy them out?
It's not even specific. It's either because he gets half of it if we sell it, or he buys me out of it, or I buy him out of it.
But there's no language that says divide everything in the trust equally to the kids first. Does it just say that?
That I'm not 100% positive.
Okay, so we got to so first and foremost, the important thing is to figure out what the trust says. So let's assume the trust does say divide everything equally. Otherwise, you guys wouldn't be thinking that it's equal. So I assume that it says that. Now, if it says divide and pay it out, well, then arguably the house should come out of the trust into both of your hands, and then you guys can sell it. Or you could buy it out. But right now, as long as it's sitting in the trust, and if it says pay it out, then you guys are both really on the hook to pay the bills. I mean, the trust doesn't really own it. The trust only owns it temporarily until it comes out to you guys. If the trust says hold it in trust for the benefit of you guys, now the trust owns it, well, then the trust has to pay these bills. But if there's no money in the trust to pay the bills, then you kids kind of default have to pay the bills, the maintenance, the upkeep, the etc. But it sounds to me like you don't really want the house. Is that correct?
Yeah, he's buying my half out.
Okay.
We agreed upon a price, and then I'm basically the bank with loaning him the money, so he's paying me monthly.
Oh, so what will happen is you will have to do a purchase and sale agreement. You will have the house valued at whatever you agreed on. I assume it's fair market value. And when you sell it to him, yes, you will have a deed prepared from the trust. I mean, I think if that's what you're doing, I think you got to get it out of the trust, because you're going to be the one that wants the note, right, in your name. You're probably not going to want the note in the trust. So,
well, he's buying me out, so it's going to end up being still in the trust, I believe, because I'm the trustee.
But again, I think if the trust says divide and pay it out, then you got to take the property out of the trust. If the trust doesn't require it to be held in the trust, then you got to pay out the trust. And then both of you would own the property personally, and then you can sell him your half, and you personally can own the note so that the payments will come directly to you. And the good news is there won't be any capital gains tax, because you got to step up in basis on the date of death. So you don't have to worry about a capital gains tax situation here. So it should be a tax-free transaction, but you probably want the deed to the note, or you want the note in your hands, not in the trust, only because I don't know what the trust says. If the money goes into the trust and the trust has to pay out money equally to the kids, well, then you're only getting half the money from the note, and you don't want that. You want all the money from the note because you sold your entire half. So hope this helps a little. It's a little hard to answer specifics about a trust when I don't have it, but I hope I gave you something to at least go look at and check out that trust and see what it says and just follow the terms. But it certainly sounds doable for you. So I hope that helped a little. And folks, speaking of help, when people do these estate plans, like this case with Eric, how you leave assets to the beneficiaries, what the document says, which is exactly what we were talking about, is exactly what's in this guide. And folks, it's the end of the month. It's the last day. So this is the last chance to get this guide, how to leave assets to beneficiaries. For folks who have done their planning and think they've already got it set up right, look at this guide and look at all the different ways you can leave assets to beneficiaries. Controlled, generation skipping, bloodline planning, divorce proofing, you name it. It's in the guide, and it might help you if you've already done your planning. Make an adjustment if you want. for those who have not done their planning, this is a great place to start because you'll at least learn how options you have to leave your assets when you're doing your trust planning. So call, get the guide, How to Leave Assets to Beneficiaries. Last chance, 866-848-5699 or legalexchangeshow.com. Again, 866-848-5699 or legalexchangeshow.com.
Todd, when it comes to, a beneficiary receiving their actual inheritance, can you give a little bit of color as to the timeline as it relates to, hey, if someone has done trust planning, how long does it typically take for a beneficiary to receive that inheritance? Whereas if someone hasn't, and maybe there's just a will, or in some cases no will, how long does it take in those cases?
Yeah, so great question. What really dovetails onto Eric, right? So I was focusing on Eric, saying, Eric, what does the document say? Does it say you can actually distribute the property out right away? Well, if you can, then the timing on something like that would be what? Really short, right? So let's play out the string. The timing on something like that would say, hey, divide and paid out. I don't have probate. I don't have a headache. I don't have to wait to file anything. I can just get the trustee appointed, make the distribution, technically. So short. However, if you've not done any planning, right, and it has to go to probate, well, now we're kind of dealing with filing the will, getting somebody appointed personal representative, notifying the heirs at law, waiting for a return day to go back to court, get the appointment, and then filing an inventory, filing an accounting. There's just a lot to go through before distributions can be made. Now, during the year-long process that probate takes, you can start making distributions. You can pay bills out of the estate account. It can be done. You don't have to wait. I don't want to make you feel like you have to wait the entire year, but, certainly it's longer. And then back to the idea of a trust, the trust as I described it in the Eric situation, yeah, it could come out right away. Same token, you could have a trust designed to say, I want to hold assets in trust for my children, maybe for their whole life. Wow, that's a long time. Well, that doesn't mean that they're never going to get it. You could have it set up where discretionary distributions come out to the kids over the life of the kids. And those discretionary distributions are what protects it from future creditors, future generation skipping tax benefits, right? Because if you don't own it, then it's not available to the creditor. But it can come out as needed. So the kids can still enjoy it over their lifetime, but it's protected, from creditors and ultimately from future divorces. So really, it's the terms of the trust that dictate the time. And of course, no planning could be a really long time.
Mr. Lutsky, thank you so much for joining us today.
Always a pleasure.
This has been Ask Todd on the Financial Exchange Radio Network. Ask Todd with Todd Lutsky has been presented by Cushing Dolan, serving Massachusetts and New England for more than 30 years, helping families with estate and tax planning, Medicaid planning, and probate law. Call 800-393-4001 or visit CushingDolan.com. The views expressed in this segment are solely those of Cushing and Dolan. Armstrong Advisory does not provide any legal or tax advice. Please consult with your legal or tax advisor on such matters. Cushing and Armstrong do not endorse each other and are not affiliated.
All right, well, we're going to head to the bottom of the hour here and get you caught up on what markets are doing to the first quarter GDP reading that slightly disappointed this morning. We'll do all of that and much more here on the second hour of the Financial Exchange with Chuck and Paul and Tucker here. All coming up, second hour, Financial Exchange. Stay tuned.
Retirement planning is complicated enough without having a formal budget to help you maintain your lifestyle during your later years. This is Mike Armstrong from the Armstrong Advisory Group. Our new guide called How to Build a Retirement Budget was written specifically for this purpose. Our goal is to help take your financial concerns out of your retirement years. There are numerous issues to deal with when creating a retirement budget. Everything from understanding where your income will come from, to setting up a proper withdrawal strategy, to being able to remain flexible as market conditions change. This new guide offers structural guidance that may alleviate the pressures of creating your budget. You can request your copy right now by calling 800-393-4001 and ask for our new guide today. Once again, that number, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com. This is the Money Matters Radio Network, WBNW 1120 AM and W275 CM FM, Concord, Boston. The Money Matters Radio Network.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818. Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Consistently voted one of the top Caribbean destinations, the United States Virgin Islands is the perfect place for your next vacation. Whether you're looking for a romantic getaway, a long weekend with friends, or a family vacation, St. Croix, St. Thomas, and St. John have everything you need to enjoy that special time away from home. Take advantage of a variety of incredible promotions that are available right now. Go to visitusvi.com/promotions, where you'll find the details about all of these amazing experiences, including a stay at the Divi Carina Bay all-inclusive beach resort and casino on St. Croix. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Don't miss your chance to enjoy America's Caribbean paradise, the United States Virgin Islands. Head to visitusvi.com/promotions for more information and to book your trip today. That's visitusvi.com/promotions.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutsky from the law firm of Cushing Dolan with your Financial Exchange Quick Tip of the Day. And today we're talking about your brand new guide, Todd, how to leave assets to your beneficiaries. Todd, why can't you just add your kids to your accounts or to your house deed?
Well, you can. It's just not a good idea. So people who do that understand with an account, right? You can put a joint name on the account. Now, that doesn't actually complete the gift because you actually have to take the money out and then the gift is complete. But when you set it up, yeah, the asset would avoid probate. But if something happens to the child, it's going to be, available. Half the asset would be subject to the children's creditor. So you don't want that. And secondly, if you only put one kid on the deed, you've likely disinherited the other kids. So it's not really good planning overall. Whereas if you put the house in the kid's name, now you've actually made a completed gift of half the house and would need to file a gift tax return. Number one. Number two, of course, it's exposed to the child's creditors and, yes, divorces. You could find yourself at some point owning half your house with an ex-in-law. Not sure that's a good way to plan. So please, put together trusts. Don't just throw names on deeds or on bank accounts because, as I always like to say, nothing good comes from giving assets away while you're living.
The estate planning experts at Cushing & Dolan have been helping families like yours for more than 30 years, and they've written a brand new guide called How to Leave Assets to Your Beneficiaries. To get your free copy of this comprehensive guide that will help you determine the best way to leave assets to your family, simply call 866-848-5699. That's 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Paul Lane. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Paul Lane.
Chuck, Paul, and Tucker with you here as we kick off the second hour of the show. And markets are selling off on the equity side, though not as bad as they were a little bit earlier in the morning. The Dow is currently down 345 points at the moment, about 0.85%. S&P down 65 points, about 1.2%. And the NASDAQ is off 281 points, or about 1.6%. All three of those indices were down about an additional 1% around 10 a.m. this morning, and have subsequently come back, made up, anywhere from about 40 to 60% of their losses. So a little bit of positive movement over the last hour, but still off fairly, meaningfully so far today. Taking a look at the 10-year Treasury, not really moving at all, sitting pretty steady at 4.17%. That's down 0.4 of a basis point over the last day. You've got oil continuing to sell off. This is something that I do want to come back to, so remind me to touch on this. Oil down $1.06 a barrel to $59.36 right now. And we've also got the AAA national average for gas prices moving back up a little bit, probably just some price cycling happening in parts of the country. But AAA national average for gas prices up 2.2 cents overnight, actually, to 3.18 and 0.2 cents. But still, we've just been in this 3.10 to 3.20 range over the last month or so. No real signs that we are breaking out in either direction there. And we've got gold off $14.70 an ounce, currently sitting at $3,318.90. Paul, let's talk a little bit about one of the classic nursery rhymes. Sell in May and go away. What age did you start getting your kids up to speed on this one?
Within the next year or so, I'll have my son privy to these seasonal trading patterns that there's Sell in May, go away. There's the Santa Claus rally that we talk about a lot around year end as a focus. What are some of the other ones that I may be
the other one that people like to talk about is October, where because September tends to be a month for sell-offs, October tends to be rebranded as Uptober. So that's one that is always popular out there. But you got this piece here. It's titled "Sell in May, Don't Get Taken In by Seasonal Trading Patterns." And I think that, look, here's the deal, quite honestly, on any of these pieces. Like, seasonality is a real thing. Like, it's not something that just doesn't exist, but it's also something where you have to remember that seasonality is an average of what we have seen at different points in the year historically, and that doesn't mean that it inherently follows that same path every year. And so I think seasonality can certainly have, some interesting explanations for why certain things happen at certain times of the year, but they're not. It's not something that you can inherently base a plan around, and there can certainly be other things going on in the short term in the economy that can override it, which is why it's not something that is in any way, shape, or form reliable if someone were to be considering trying to make it, the basis of how they are going to invest.
No, the major takeaway I had from this piece, and like you mentioned, the seasonality stuff is fun to talk about, but never should be an investment thesis for anyone out there, just because the unpredictability of market returns. But there was in this CNBC piece a hypothetical growth of $1,000 invested in the S&P 500 in 1970, and this comes from Dimensional Funds. They did this study that if you were to invest $1,000 in the S&P 500 back in 1970 through 2019, that $1,000 would grow to $138,000, almost $139,000. However, if you had missed the 5 best days of the S&P 500 during that period from 1970 to 2019, your $1,000 would be $90,000. So almost a differential there of about $50,000 between the 1,000 that grew to 139 for 2019, 139K, versus the one where you missed out on the 5 best days. And it just reiterates the point. I think it's helpful, Chuck, to look at these types of things amidst market uncertainty and turmoil, the long-term nature of investments, and also it also reiterates the idea of not trying to time markets, because missing out on significant up days really can hurt your returns over the longer time. So that's the main takeaway that I had of these pieces. It's nice to look at these numbers over a wide period of time when you're sort of in the throw of things, when things are uncertain.
All well and good. Can I tell you why I really dislike the numbers that you just read, actually?
Why?
So here's the thing. So if you miss let's just use that one there. You miss the best 5 days every year for 55 years.
Yep.
Actually, this is through August 2019, so it's really through 49 years.
Mm-hmm.
First question that I have, Paul, what are the odds that if you make changes to your investments, what are the odds that the 245 days that you pick to be out of the market are the worst, or are the best 245 days in that 49-year period?
Extremely slim.
So, that's not realistic, number one. The other piece is that typically, as we've seen this month, I think April of 2025 is a great example of this. The best 5 days and the worst 5 days of any given year usually occur in pretty close proximity. Mm-hmm. It's not an always situation, but it's generally something that we talk about where, look, volatility doesn't usually just move in one direction. It can move in both. And golly gee willikers, we've seen that this month simply because you had one of the worst 2 and 3 day stretches that we've ever seen in the S&P 500 at the beginning of the month. And towards the middle of the month, you saw one of the biggest single day upward moves in the S&P in its history as well. Mm-hmm. So I guess what I'm getting at is, sure, if we really believe that it's a coin flip from day to day, which I think is where I land, is that, look, I have no idea if the market's going to go up, down, or sideways tomorrow. It's a coin flip. And that's, by the way, what the data shows is basically that from day to day, it's pretty close to a 50-50 chance as to whether or not the stock market is going to be up or down in any given day. It's a slight bias towards up, but it's very small.
Mm.
If one believes that, then why would the data about missing the best 5 days be relevant? Because if someone were to try to trade the market, it's more of a coin flip than anything else. And furthermore, even if it is a coin flip, why would the days they miss specifically be the best ones?
It's not necessarily. It's just I don't take it to the exact extremes of the absolute dollar return. It's more for illustrative purposes for the recurring theme of investing over a longer period of time. But yeah, absolutely, point taken. It would be unbelievable serendipity that this would ever occur for anyone. But we know you've experienced with clients, there are some out there that you just couldn't talk of selling out. And the problem with them in general, whether it be 2008 or March 2020, whatever difficult times, is they were slow to get back in. And they missed on not necessarily the best 5 days or anything like that, but missed a significant rally back from what was a very difficult time in the market.
What I can tell you is if you do happen to find the person who always misses the best 5 days in markets, I'm interested in meeting them as a contra signal. I'm interested in that. I would love days every single year for 49 years running. Let's take a quick break here. When we come back, we've got a little bit of trivia that we're going to be doing here. And then I want to talk about Amazon yesterday, and specifically the decision around whether or not to list the tariff upcharge on their prices. We'll talk about, hey, is that something that would have been a good move, bad move, or neither right after this.
Tariff fears continue to grip markets. Get the latest straight from Wall Street right here on the Financial Exchange Radio Network. New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
Beneficiary planning and asset protection go hand in hand. Cushing & Dolan has a new guide out called How to Leave Assets to Beneficiaries, and it can help make your planning process smooth and easy. Leaving your assets to your children isn't as simple as it sounds, especially if they have problems of their own. If you're retired or nearing retirement, it's time to consider the best way to keep your assets in your family while avoiding significant financial consequences down the road. Call Cushing & Dolan right now at 866-848-5699 and get their new guide called How to Leave Assets to Beneficiaries. You'll learn which paths are the safest when it comes to protecting yourself and your children while avoiding unnecessary risks that can create substantial problems in the long run. That number again is 866-848-5699. Or you can request it online from our website, LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Retirement planning is complicated enough without having a formal budget to help you maintain your lifestyle during your later years. This is Mike Armstrong from the Armstrong Advisory Group. Our new guide called How to Build a Retirement Budget was written specifically for this purpose. Our goal is to help take your financial concerns out of your retirement years. There are numerous issues to deal with when creating a retirement budget. Everything from understanding where your income will come from, to setting up a proper withdrawal strategy, to being able to remain flexible as market conditions change. This new guide offers structural guidance that may alleviate the pressures of creating your budget. You can request your copy right now by calling 800-393-4001 and ask for our new guide today. Once again, that number, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up because we have something better,
stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit GoRedForWomen.org today to learn more.
Miss any of the show? Catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network.
All right, time for trivia here on the Financial Exchange. And on this day, back in 1789, George Washington was inaugurated as the first president of the United States. Trivia question today: which city hosted George Washington's inauguration? Once again, which city hosted George Washington's inauguration? Be the 8th person today to text us at 617-362-1385 with the correct answer, and you win a brand new Financial Exchange Show t-shirt. Once again, the 8th correct response to text us at 617-362-1385 will win that t-shirt. See complete contest rules at financialexchangeshow.com.
Paul, yesterday morning we had, in a span of an hour, just a pretty remarkable reversal from Amazon. So there was a report from Punchbowl News. I think it was maybe at like 8
like 7:45, 8:15 in the morning that Amazon was going to display the cost of tariffs on their products.
Right.
The White House press secretary then came out and said that this would be a hostile and political action. And within the hour, Amazon said, hey, we had discussed doing this, but it was in a very narrow subset of our business, and the idea was, quote, never approved and is not going to happen.
Right.
So there's a piece in Bloomberg today, and it's from Allison Schrager, and it says Amazon should list the cost of tariffs as part of the price. And I'm just going to read a couple quotes from it just to outline the thinking on this. It says, that's too bad. The idea is a good one that's catching on with other retailers. And Amazon itself already lists state sales taxes separately at checkout, so why not include a tariff, which is just another form of taxation? It goes on to say, I'm a fan of pricing transparency, even though most people hate it. Europeans who shop in the U.S. always complain that the price they end up paying at the register is higher due to taxes than the one that they see on the tag. And basically saying, look, I want this to, not be a surprise and want to know where the cost is coming from. So I was thinking about this and just trying to kind of like work through like the mechanics and just like what this means. And I came across something that I thought would have actually been really interesting if Amazon said, look, like we want to, be able to do this, but still throw a bone to the Trump administration. What if, Paul, and I'm just spitballing here, this is kind of in real time, so if this is the dumbest idea ever, let me know,
Okay.
all right?
Yep.
Amazon says, look, we're going to, list the tariffs as, a subheader below the price or whatever. But the other thing that we're going to do is have a button on our website. When you're going through, when you like put something into Amazon and you get 500,000 different items and you're like, oh boy, which one do I get? And you just pick the first one because it's there.
Yep.
What about one of the ways that you can filter that list is, hey,
US
sort me by
alternatives.
products made in the United States.
Right. Yep.
That to me would seem to be something where you're kind of throwing a bone saying, look, we're going to list the tariff price, but if you want to encourage people to buy U.S., click that button and you're buying only products that are made in the United States.
I think that's I'm not going to poo-poo that idea. To me, that makes a lot of sense. And to piggyback off Allison Schrager's piece here, to me, put the pricing on there and the tariff impact. And if you want to accomplish the goal of the administration, which, like you just mentioned, the focus on buying more goods made in the U.S., put that out there so that the consumer can say, gee, this costs this much and I'm paying an added cost because of this tariff. You, Chuck or Paul, is there a way that we could go out and shop and find something that's U.S. made that's cheaper and still accomplish the goal, like you mentioned, of buying something that's made domestically? And Amazon would have the type of platform with just the amount of third-party sellers that they have there and the way that they're able to run their algorithms. I'm sure that's something that they could probably develop. I don't think it would be too much of a stretch to ask for that potentially.
Right, like it wouldn't be, from the company that does all these different things, would it be that hard to have a Made in America page?
No, I can't imagine that it would be.
Or again, an option, filter by country of origin for United States.
Mm-hmm.
So part of me thinks that would just be interesting anyways, just because, again, as we've been going through all of this tariff stuff over the last, couple months, I've been like kind of wondering, like I start poking through the Amazon listings more. And here's the thing, on some listings you can find it, on some you can't. But I've, kind of thought about it and wondered, like, gee, like, wouldn't it be really interesting if all different retailers, that's not an Amazon thing, said, hey, like, allow me to filter by country of origin. I mean, I can already filter by whether, the rug I'm buying is green, blue, square, round, real, polyester, I can already do that. Wouldn't a country of origin filter be kind of interesting in order to do it? And by the way, lest you think that this is just like, something where, Chuck thinks that, think about what's going on in other parts of the world. I mean, we've seen the stuff in Canadian retailers where they're putting big Canadian flags on all of the Canadian products in order to encourage people to buy those. I mean, it's basically the same thing here. Am I wrong?
No, that's very much a similar view. It's incredible how protectionism has just taken over so many global economies, which, skeptical as to if that's the best way for the global economy to go over the long term.
Well, sure. I mean, ultimately, like when it comes down to it, this is still raising a tax on the cost of doing business. Yep. And, you're going to have to see how that ends up filtering through into prices and margins. Hint, it's not going to be good for either. But hey, if you want to offer people, easy alternatives to avoid having to pay those taxes, all right, here, Amazon, like filter by Buy American and go from there. And
that way the consumer's educated too. They know what they're buying and they know what the impacts are.
Sure. Piece in CNBC, homebuyer mortgage demand drops further as economic uncertainty roils the housing market. And this, we get this data every week. I don't usually put too much stock in it, and quite honestly, I don't put too much stock in this week because it's 1 week of data. But basically what we are seeing here is that with mortgage rates still hanging out in that like 6-8 to 7% range, you end up in a situation where applications to purchase a home dropped by 4% last week compared to the prior week, but volume's still about 3% higher than the same week a year ago. So it continues to paint a picture that's the one I've been seeing all year, which is, hey, there's not really any clear signs of the housing market falling apart and seeing, drastically lower volume. But there's also no sign that it's providing any kind of tailwind to this economy right now.
No, we've seen increased inventory throughout the course of this year, and it seems like rather tepid demand in terms of purchase activity, but nothing that would point to concerns about cracks in the market or anything like that. Perhaps we see some price declines nationally later this year from the impacts of maybe Florida and some other markets that just have a tremendous amount of inventory, but I don't think that it's going to be tremendously volatile in one direction or another.
Taking a look at markets as we head towards the bottom of the hour, still hanging out near the highs of the day, but still down, if that makes any sense to anyone listening. You've got the Dow off 291 points, the S&P's down 57, NASDAQ down 258. Again, it was, meaningfully worse about an hour and a half ago, so markets trying to hang in there at the moment. We're going to take a quick break here. When we come back, we got the trivia answer, and we're talking Social Security after this.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network. Consistently voted one of the top Caribbean destinations, the United States Virgin Islands is the perfect place for your next vacation. Whether you're looking for a romantic getaway, a long weekend with friends, or a family vacation, St. Croix, St. Thomas, and St. John have everything you need to enjoy that special time away from home. Take advantage of a variety of incredible promotions that are available right now. Go to visitusvi.com/promotions, where you'll find the details about all of these amazing experiences, including a stay at the Divi Carina Bay all-inclusive beach resort and casino on St. Croix. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Don't miss your chance to enjoy America's Caribbean paradise, the United States Virgin Islands. Head to visitusvi.com/promotions for more information and to book your trip today. That's visitusvi.com/promotions.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much, and they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Hi, I'm Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts provides thousands of hours of voluntary services at our VA medical centers and soldiers' homes and is the only DAV department in the country to lead a veterans housing initiative for both single veterans and those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Hi, it's Chuck and Mike from the Armstrong Advisory Group, and we have a guide available this month titled How to Build a Retirement Budget. Mike, one of the issues that we've seen for retirees in the last several years is significantly higher home insurance premiums and property taxes going up as well. How do people attempt to navigate this but still stay within the budget they had laid out for themselves?
Yeah, look, the cost of home ownership, I don't think this is a surprise to anyone. Whether you are buying a home for the first time or you are just seeing those insurance and tax rates that you mentioned going up, it is really impossible to avoid. And I think that's where that flexibility in the budget comes in and needs to be recognized. Because, for instance, you might have factored in a huge cost savings by moving to Florida a decade ago.
Sure.
A lot of that has been eaten up over the course of the last several years. And so you have to have a budget that can evolve with your lifestyle over time.
How often do you review that budget?
You know, I think it's important to at least get a grasp on it once a year. And you can really see costs fluctuate a lot during those periods of time. But those flexibility points are really important because you have to account for inflation, and different things inflate at different rates. So, for example, you might see that your costs of health care rise dramatically in your later years, both because you need more of it and because healthcare costs inflate faster than other types of costs. And you have to build those into the budget, even though you might be paying nothing for them today.
This month, our guide is titled How to Build a Retirement Budget, and the way to request it is by calling 800-393-4001. The guide again is How to Build a Retirement Budget, and the number to call is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Miss any of the show? The Financial Exchange Show podcast is available on Apple, Spotify, and iHeartRadio. Hit the subscribe button and leave us a 5-star review. This is the Financial Exchange Radio Network.
All right, trivia question today was, which city hosted George Washington's inauguration? That would be New York City. Bill from Stoneham is our winner today, taking home a brand new Financial Exchange Show t-shirt. Congrats to Bill. And we play trivia every day here on the Financial Exchange. See complete contest rules at financialexchangeshow.com.
Paul, we got a piece in CNBC today. It's titled, Does It Still Make Sense to Wait to Claim Social Security Retirement Benefits? Here's what experts say. What do the experts say, Paul?
The experts say, Chuck, that one of the things that you have to consider is for those people who elect to take their Social Security as early as possible, which is age 62, there will be a 30% cut to their monthly benefits. The full retirement age for most folks out there is 67, so you will be experiencing that 30% cut over that period of time. There is a benefit to waiting that if you wait to age 67 and then even further out from there to age 70, there is an 8% bump that you will receive each year that you defer taking your Social Security income. The tricky thing with Social Security is what it always comes down to is life expectancy, which none of us have a crystal ball to know as to whether or not how far we're going to make it out or how many years we're going to be collecting for. But there is a benefit to waiting in that you have the ability to pass down your benefit to your spouse. If you're playing, for two people, there is some advantages that can come in there. Typically, it is better to wait. There are concerns out there regarding the funding for Social Security. It is anticipated that potentially in 2033 that its funds would be depleted and they would only be able to pay 79% of benefits. So that has had people leaning on the idea of, oh, geez, if it's going to be depleted, perhaps I access it earlier. But many pundits out there think that Social Security will continue on, that some resolution will be reached, particularly for those people who are going to be collecting benefits in the here and now over the course of the next 5-10 years or so. A lot of skepticism as to whether or not benefits would be cut for them. More likely it would be generations coming up after them that would see any type of cut in benefits.
Folks, Social Security forms the backbone of many retirees' income streams, and it dovetails nicely into the guide that the Armstrong Advisory Group has available this month. Now, I say this month because if you take a look at the calendar, it's April 30th. April is one of those months that only has 30 days in it. 30 days hath November, April, June, and September. Well, this is the last day that we are giving away the guide titled How to Build a Retirement Budget. So, how do you request it? Go to armstrongadvisory.com. When you're there, there's a big button that says click here for complimentary financial guide. Fill out the information, request it right there. Again, it's titled How to Build a Retirement Budget, and it gets at some of the big questions that you need to ask yourself as you're trying to figure out how much money you need on a monthly basis, which then helps to inform, hey, when should I take Social Security? So the guide, again, is titled How to Build a Retirement Budget. The way to request is by going to armstrongadvisory.com and requesting it right there. You can also call 800-393-4001. But again, this is the last day to request this guide. And so, again, you can go to armstrongadvisory.com, click on the button for the complimentary financial guide, and then just input your information, and boom, you're off to the races. Again, that number is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
I mentioned during the open for this hour, I wanted to talk a little bit about oil. Is that okay, Paul? We could talk in a little bit of oil right now?
Absolutely. Let's go for it.
So a couple things are interesting to me, and I'm actually going to tie this into the U.S. dollar as well, just because what we have seen in the last few weeks now is a pretty significant rebound in equity markets. Equity markets up over 10% from their bottom that they found earlier this month. And the bond market has rallied as well. We've seen things cleaned up. The U.S. 10-year is right now at about 4.17%. If you go and take a look, earlier in the month, you had that 10-year up around 4.5 just a few weeks ago. And so bonds and equities have rallied. And so you look at that and you say, okay, like that's something that, makes you feel a little bit more confident about where things stand. What's interesting to me is two places that have not rallied in any meaningful fashion are oil, where West Texas Intermediate right now is at $59.95 a barrel. That is at the same place it was on April 8th, which is pretty close to where equity markets bottomed. And so oil has had no upward move that, meshes with, hey, there's going to be more economic activity or anything like that. And likewise, the U.S. dollar, when you look at the dollar index, it's still hanging out right around, 99 and change, which also is pretty much, we got a touch lower than what is today. But, just trying to make sense of how these different asset classes are moving. And so you've got equities rallying on, hey, maybe there's going to be, some deals on this and that happen. You got bonds rallying now that the immediate, impetus of, tariffs has been pushed off in a lot of cases. But you still can't get any kind of rally out of oil, and you still can't get anything out of the dollar. And I just find that interesting. I don't know if it means anything. I mean, ultimately, this is one of those divergences where you kind of sit there and you say, hey, either oil and the dollar are going to be right about something, or stocks and bonds are going to. But it's a little bit of a pickle that we find ourselves in, where things are diverging from how they were behaving earlier in the month. Any thoughts on this, Paul?
No, it certainly seems that on the oil front that they are very much leaning into this idea that there is going to be a slowdown in economic activity. China and the U.S. are the top two oil-consuming nations, and a trade war between the two of them certainly would mean less goods being exchanged between the two countries and just less economic activity in general. So with this pricing, just really leaning into this idea that you aren't going to see a tremendous amount of economic activity, and as a result of that, oil prices will remain low. You also have OPEC continuing to boost some of their output over the course of the next couple months. They're suggesting that they would do it for the second consecutive month in June. They're set to meet on May 5th to discuss those plans. And then domestically, we've seen inventories rise by about 3.8 million barrels this week for U.S. crude. So it is just an interesting point to note that equity markets seem to be more optimistic on things than the energy markets, and we'll see who is correct.
Let's talk a little bit about earnings that we are going to get after the bell today. We've got Microsoft and Meta on tap. Either one, would you prefer to start with Microsoft or Meta, Paul? What are you thinking?
Let's lead off with Microsoft.
So Microsoft, obviously the focus for them, I think, is going to be twofold. Number one, what are they seeing as far as, revenue in their cloud business, which is where most of the AI stuff ends up being categorized by them. The other piece is going to be, what are they seeing as far as their future CapEx plans, and are they still increasing CapEx as rapidly as they thought previously? Because if not, then you've got some potential problems with NVIDIA, who already had to take a charge earlier this month for some extra chips that they have on hand that they haven't been able to move. They said it was related to not being able to send them to China. But on top of that, yesterday after the bell, Supermicro Computer, who admittedly had some, accounting problems in the last couple of years that forced them to go through a few different auditors, they came out with earnings and basically guided that, things were not going to be anywhere near as robust as they previously thought. And so Supermicro today down about 14%. And so if Microsoft, one of the biggest customers for AI hardware, says anything about, hey, we're downshifting, our capacity build out that we're trying to, do, I think potentially it has the ability to move everything in that semiconductor space, just because clearly there still is, a lot of growth priced in there, and you have to start wondering if that is going to, if that's going to be able to continue.
Yeah, Microsoft was expecting to spend about $80 billion this year on AI-related investments. There obviously is an uncertain microeconomic backdrop, so it will be interesting to see if they reiterate their guidance. Alphabet, a competitor in the space, they reiterated their CapEx guide for this year. So last week they said that they were going to stay on the same track. It does seem like from pieces that I've read that there continues to be a lot of belief in continuing to spend on AI for these big companies out there. There doesn't seem to be any weakening of that. I know that Microsoft had slowed down a little bit on some of their data center investments, but not necessarily any big shift on the AI front. And then also we'll be focusing, like you mentioned, on the cloud computing growth of Azure. That had slowed down a little bit. Its revenue growth was down to 31% from 33% in the January quarter. So that's a number that we'll be focused on as well at the close of the bell here.
Let's take a quick break. When we come back, we'll do a little bit of stack roulette after this.
Market volatility is at its highest point since the pandemic. Keep it here for the most comprehensive coverage of the global trade war. This is the Financial Exchange Radio Network. Beneficiary planning and asset protection go hand in hand. Cushing Dolan has a new guide out called How to Leave Assets to Beneficiaries, and it can help make your planning process smooth and easy. Leaving your assets to your children isn't as simple as it sounds, especially if they have problems of their own. If you're retired or nearing retirement, it's time to consider the best way to keep your assets in your family while avoiding significant financial consequences down the road. Call Cushing Dolan right now at 866-848-5699 and get their new guide called How to Leave Assets to Beneficiaries. You'll learn which paths are the safest when it comes to protecting yourself and your children while avoiding unnecessary risks that can create substantial problems in the long run. That number again is 866-848-5699. Or you can request it online from our website, LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
One of the keys to enjoying a peaceful retirement is flexibility. Hi, this is Chuck Zodda from the Armstrong Advisory Group. Today, retirement planning involves lots of possible changes and challenges given all of the external factors that may affect your goals. So creating a budget for your retirement is vital to financial stability. Retirement comes with a number of monetary considerations, from how much money you'll need every month to managing your existing investments through market volatility. Our new guide is called How to Build a Retirement Budget, and it will offer a variety of options for your consideration that may lessen your risks when it comes to your planning. Call right now at 800-393-4001 and ask for our new guide today. That's 800-393-4001 or request it online from our website, armstrongadvisory.com. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Consistently voted one of the top Caribbean destinations, the United States Virgin Islands is the perfect place for your next vacation. Whether you're looking for a romantic getaway, a long weekend with friends, or a family vacation, St. Croix, St. Thomas, and St. John have everything you need to enjoy that special time away from home. Take advantage of a variety of incredible promotions that are available right now. Go to visitusvi.com/promotions, where you'll find the details about all of these amazing experiences, including a stay at the Divi Carina Bay all-inclusive beach resort and casino on St. Croix. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Don't miss your chance to enjoy America's Caribbean paradise, the United States Virgin Islands. Head to visitusvi.com/promotions for more information and to book your trip today. That's visitusvi.com/promotions.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
The Financial Exchange Show podcast drops every day on Apple, Spotify, and iHeartRadio. Hit that subscribe button and leave us a 5-star review. You're listening to the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. The U.S. Virgin Islands are St. Croix, St. Thomas, and St. John, and they are the perfect place to take your next vacation. Enjoy spectacular beaches, world-class cuisine, and a wide variety of water sports. Don't miss your chance to visit America's Caribbean paradise, the United States Virgin Islands. Go to visitusvi.com for more information and to book your trip today. That's visitusvi.com.
Paul, what do you got for me for Stock Roulette?
Chuck, Starbucks needs a jolt, and it just got some cold brew. Is an article here from Bloomberg. Starbucks had reported earnings earlier this week. The stock was off 6 or 7% upon those earnings. They had hired Brian Niccol, who was the CEO previously of Chipotle, did a tremendous job turning around Chipotle, and the stock, like I mentioned, Starbucks is off about 7% today in market trading, where they just haven't seen any real positive impacts of a turnaround since he's taken the helm. Granted, it's only been a couple quarters here, but they've just found that they haven't been able to increase sales traffic. And you and I have talked about it on the show before, where they find themselves in a difficult predicament where initially Starbucks, the focus there was that you could go sit quietly, enjoy a cup of coffee, and spend a significant amount of time there. But with the adoption of the mobile app, it seems like when you visit Starbucks that much more of the focus is just picking up online orders. And they had all sorts of issues with staffing and being able to replicate the experience that they once had. It does seem like with recent advertising campaigns that you'll see watching the NBA playoffs or whatever you're watching, that they're trying to get back to their roots of having Starbucks be more experiential. But it seems like they're having a tough time shaking off sort of the more recent DNA, which just seems like it's predicated on kind of mobile ordering. You're in and out of Starbucks very quickly.
Yeah, I mean, look, I think the other thing on this is, and maybe I'm going too far down the rabbit hole on this because I'm not a coffee drinker. Like I don't do it, so I don't understand like all of the ins and outs of the different brands and this and that. But I think, is it fair to say that the core promise of Starbucks was two things? Number one, and I'm not saying that this is true, I'm just saying that this is what they promised.
Mm-hmm.
Number one was a better cup of coffee.
Yes.
Which is why they command the premium pricing.
Mm-hmm.
And number two was a vibe and setup that looked and felt like what everyone thought a stereotypical, like, small coffee place was.
Correct. I mean, if you listen to Howard Schultz, the founder of Starbucks, that is truly his vision and what the company was built upon. But at some point in time, they were early to adopt the mobile app, and by all accounts did a pretty good job developing it. But that sort of ate away at the experiential nature of Starbucks, of meeting up with someone and spending a significant amount of time there.
Yeah, Chuck, I know you're not a coffee drinker. Just to put it in perspective, that coffee house vibe that you bring up, it turned into people hovering around the counter waiting for their orders. And on top of seeing all the people waiting around the counter, you just saw 10, 20 drinks just piling up on said counter, and it just turned into a chaotic, unorganized mess. That's what the Starbucks experience turned into, and that's what Brian Niccol's trying to get away from.
So frequently when you walk in there, you don't see anyone sitting you see very few people sitting down, right, Tucker? Like it just seems like that cluster of people waiting for their mobile order is 85 to 90% of the people in there. There are very few people who are just sitting there, and it wouldn't make for a good experience if you wanted to sit and just read a book and hang out and enjoy your coffee. If you see 15, 20 people just hovering around a counter waiting for the orders, that's not the experience that they're trying to create. But I don't know if you can put the toothpaste back into the tube here. I mean, the mobile ordering is so ingrained in consumer behavior on Starbucks front. I'm just not sure I know a clear-cut answer to resolve this issue that they have. And they're struggling in China a lot too.
Can I ask you a question just because I'm kind of dumb about this? People generally get their coffee at the same time every day, right?
Yes.
Sure.
Why does it matter if it's mobile orders versus in person?
For the consumer?
Well, doesn't the line take, in order for someone to make that coffee, doesn't it take the same amount of time whether it's 20 mobile orders or 20 in person?
Yes.
Well, it's just a matter of if you're trying to get back on the highway quick. You just want to pick it up at the drive-thru or walk in quick. You're in and out in 20 seconds.
Yeah, my wife doesn't want to take the chance that there's going to be 5 or 10 people in line with young kids in the car or with her in the store. She'd rather just be ready for when she gets there.
But now there are some circumstances, Chuck, to your point, where there's
actually
so many mobile
behind.
orders that you might as well have just stayed in line.
Right.
So I guess my question is, why don't they just throttle the mobile ordering?
Get rid of it?
Okay, just, hey, we know that our baristas can process 2 mobile orders a minute. Okay, so if we get 10 mobile orders, the next pickup time is going to be pushed back 5 minutes so that you know when to show up.
Sure. There's got to be some algorithm for determining the time.
Right, you could risk pushing it back too far for the person ordering. I guess they've already committed at that point, but that would create a frustrating customer experience.
But they're going to get
it
either way. Is it different from either way? They're going to get the coffee at the same time.
But
why not just tell them when they're going to get their coffee?
But wouldn't that, as a result, create an effect where they have to wait 45 minutes to an hour to pick it up if we're stacking them that far?
No, it wouldn't be that much.
Don't they have to wait that long anyways? All I'm saying is, if you know it's going to take so long to make your coffee, tell people. I don't know. Let's take a quick break for the entire rest of the day. Stocks remain off, but improving as the day goes on. We'll see if they close anywhere near even or positive today. Back at tomorrow with more data and earnings on the Financial Exchange.